Hello, everybody. Welcome to the Fundamental Analysis webinar. My name is Troy. I'm a Senior Account Manager with AvaTrade. I'll be presenting the live session today. Before we get going, just let's do a quick systems check. And if you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're up and running fine. If anyone runs into any issues as we go along, feel free to let me know in the chat box, okay? As always, keep in mind that all investments obviously have risk. No one trade is guaranteed to profit, but obviously each and every trade has a nice potential for profit, and that's what we're looking to do here is go over some strategies, some concepts, some ideas, and some information that will hopefully improve the likelihood of success in terms of making profits with the moves that you're making. Keep in mind that what we go over is not meant to be financial advisement, but it's coming from an educational perspective. As long as we're talking about risk, besides using the traditional methods like stop loss marks or hedge positions that sometimes we talk about how to do that to manage risk. Also, if you use the AvaTrade Go mobile app, keep in mind there's a special feature in the order window when placing trades on FX, pairings, gold and silver. Using the AvaTrade Go mobile app and on our web trader platform, you'll see an option on those assets for Ava Protect. And that basically is a function or a service that covers trades against all losses during a defined time period that you choose for the coverage for a small premium cost. And so it's something that, especially during times when you expect high volatility, that's something that can be very beneficial to have that type of risk management feature on your trades. So we'll take a quick look at that as we get going. Fundamental analysis, what is it? Basically, it's looking at the news. It's looking at what's going on in the world and trying to understand how that might affect the movements on the charts. And so we'll do that. A look at what's going on with the fundamentals now. It's not really some big fundamental news story day. There's some mixed news, and the movements are acting as if there's mixed news. And a lot of times then it comes down to the technical entry points and just finding your proper entry and exit points, which is what we'll look to do with some examples, some simulations on my demo account as we get going. Now, there are two types of fundamental analysis that we'll do. One would be breaking news stories, the type that we call extraordinary economic events, whether it's breaking information about Brexit or about the Wuhan virus or information about trade negotiations, anything that could happen unexpected. That's the type of extraordinary economic event that you don't know when it will be or what it will be, but you can still prepare for with your strategies and your risk management. And then the other type of fundamental news would be economic events, regular announcements that are found on an announcement schedule, and we can know in terms of timing and scope what they'll be, when they'll be. And we'll take a look at some of those as well, both of which can help you with your strategy on the charts. If you have any questions, you want to give input, please go ahead as we go along. I'm happy to share ideas and topics as we go. So if you want to use the AvaTrade Go mobile app, you can find it here, AvaTrade Go. And when you look at the app, what you'll see, and you can download it in your app store onto your mobile devices, you'll see Ava Protect as an option for gold, silver, and FX pairings. And you see you can set the time of coverage, the length of coverage, whether it's by the hour, by the day, etc. And there's a small premium cost. Now, during that covered period, any losses when the trade closes or when the covered time period ends, okay, whichever happens first, any negative floating is then added to your account from the coverage. And the trade can keep running, or if it closed during that time period, obviously the trade's closed and any negatives added back. If the trade goes as you hope and you make profits, all the profits are yours. You paid the small premium cost up front. So it's a nice feature to manage risk. And you'll also see in the app that the app calculates your margin requirement for you. It calculates if you put a take profit or stop loss, it calculates your potential profit right next to it. It'll tell you your potential loss, what you're risking to the stop loss you put right next to it. So it's a trade calculator at the same time as well. When using either the web trader platform, which you access by logging in from the website here, or the AvaTrade Go app, they both have these functions in the order window. So it's very useful. What's the sentiment today? It's kind of mixed, and it's interesting because the volatility is down. We can see volatility index down, the VIX index. It's the volatility index, and it's down today. The volatility or fear factor is down today, and we see the futures are up, right? The futures are up. Now these red numbers are from yesterday, and these have not opened. This is the actual market, the actual indices. They closed yesterday in the red. Well, today the futures are up in the green. Looks like a little bit of a bounce, okay, on the futures, and we see volatility or fear is down. So the sentiment right away, you say, okay, kind of positive. The volatility is down, the futures are in the green, and that gives you an idea about sentiment and what direction you might prefer to trade. Then we start to look at the headlines. We say European stocks edge lower. Well, that's strange. The European stocks edge lower, but the volatility is down and the US futures are green. So a little bit mixed, as I was saying. The fundamentals are a little mixed. The European Central Bank is saying to have caution with the recovery. That's a little bit of a downer. You know, it wasn't coming out and saying, hey, things look great. So taking a little edge off of the positive sentiment with some of these headlines. Someone's asking about AvaProtect. 1 second. Joe, correct. You do not need to close your trade off during the covered period with AvaProtect in order to benefit from the payment. You can if you want. For example, let's say you bought on gold and it was dropping and you have it covered by the protection. And let's say your protection didn't end yet. Maybe you did 2 days of protection. You're only a day into the protection, but maybe gold plunged $50 the wrong way and it reaches a support level on the chart. And you say, wow, I really think it's going to bounce up now. But you take a look, you've got negative 3,000 floating or something. And you say, you know what? I want to take that payment from the coverage before this goes back up. So you could choose to manually close the trade early during the covered time period, which ends the coverage. And then you would collect that whole payment. Then you could reopen if now you think it'll go back up, right? And take that payment from the coverage first, then reopen a new trade. Then if it even went halfway back up, you're in overall profit. Or if you just let it run and the covered time period ends, the trade keeps going and you collect your payment. Now, if it goes back up, you're making back what you're down and you already collected the payment because the coverage ended. Okay, it can happen either way. It's a very good question. Julian, AvaProtect does not close your position. Doesn't close it for you. You either close it yourself or it gets stopped out. If you got a stop out during the covered period, any losses on that trade's added back. Okay? AvaProtect is not a feature to close trades for you. It's a protection against losses during the defined time period. Okay? But if they do close during the covered period, all the negative, if there was, is added back. Or if the coverage ends and the trade keeps running, then whatever negative might have been showing is added to your account from the coverage, and the trade can keep going and recover at that point. Okay, let's move on then. Some more news. Oil set for first back-to-back weekly losses. Okay, we all saw that. The last couple weeks, oil's been dropping. Why? Oversupply of oil again, fears of oversupply. It's a combination of things. Increased production being one of them. the OPEC nations ramped up production because the price was going back up. There was better demand as the quarantines around the world were ending and economies were opening back up. Better demand for oil, and so the price was getting above 40 and headed looked like maybe towards the resistance level up around 48. And then boom, as the oil suppliers increased production, there now is an oversupply again, and down goes the price. That's what's happened. And some fears came in about new outbreaks, maybe more quarantines coming. So some speculation as well, besides of oversupply building up, also just fear drove the price back down. Okay, so that's what we see in this article, that the demand outlook is weakening and OPEC nations gradually increase the number of barrels. Okay, it says right there. So that's what's driving oil price down. So that's some fundamental news to be aware of. World shares struggle to shake off bearish mood as U.S. tech giants wobble. So we keep seeing some bearish headlines, some negative sentiment headlines. And UK economy extends recovery from COVID, but the crash is seen fading. So we keep seeing positive news. Okay, economy's recovering, and then the second half of the headline is, but they don't think it'll keep going good. Growth seen fading, they say. So headline after headline, kind of putting a damper on this morning's positive momentum. That's the fundamental situation right now. So let's then go to the charts. And understanding now that we've got a mixed news situation, we've got all morning, the futures in the green, volatility down, but a lot of fundamental news leaking in where they think that maybe there's some fear building up again in the markets. Okay, so let's take a look then at the technical entry points and see what we can make of this situation. So I see today's climb, okay, up, 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 up. These are 15-minute candles. I'm looking at the NASDAQ. And if someone wants to suggest an asset, I'm happy to look at it. So we're looking at the NASDAQ. Here's the crash with the fear that occurred earlier this week, okay? And that's what those headlines are alluding to, the fear. Looks like there's some climbing coming out of the fear, okay? And before we get going on this, I want to show you something from trades we did in the last session on Monday. We talked about how you're not going to win every trade. And we talked about if you trade smart, instead of trying to be right all the time, you just trade smart. If you get proper technical entry points, your exposure is limited, and maybe you have a larger potential profit many times compared to your exposure. In the end, you don't have to be right more than you're wrong. You just have to make more than you lose. And so some of the trades we did from Monday's session, right? We see profits of 1,200, 3,000, losses of 288, 67, 377. Okay, profit of 1,200, loss of 136. One of the losses was a little larger, but when you add it all up, we profited, right? So this is the idea of understanding fundamentals and then taking technical entry points that can limit your exposure while going after the type of profits you're hoping to make. Okay, all the while doing stuff that makes sense to you fundamentally and then technically. Okay, and a bit of news I didn't pull up. If we look at the economic announcements that came in today, they're also mixed. Here's the economic calendar. Remember, this is the other type of fundamental news. It's scheduled. You know what it'll be, when it'll be. Look, good numbers out of the UK and bad numbers, right? Green is better than expected, better, better, better. And then 3 red ones. Worse than expected on GDP. That's really the big one. The 3-star announcement, that means more. Worse than expected, right? But still an improvement. You know, GDP went up 6.6%. Catherine, we do the technical and fundamental webinar each week. You can go to our YouTube channel, and Monday's session is there. Okay, by the next business day, this session will be uploaded as well. The recordings are all on our YouTube channel. There's a section for English webinars. And even though the movements aren't relevant anymore necessarily, still learn from the recordings, from the strategies that we do. So I see mixed news on the pound today. I see mixed news out of the European Union, better than expected, and a lot of flat announcements as well, coming in as expected. And then out of China, same thing, mixed news, maybe a little better because this is a 2-star announcement, and the negative one was a 1-star, so better than expected on new loans, which shows growth of economy, more loans being taken out. So kind of an day fundamentally, not huge news either way. And so then that takes us to a point that we might say, well, let's look for technical advantages then with our trading. Yeah, there's some European Central Bank news coming out, Julian, so that can affect things as well. And so if we look back at the economic calendar, you can see ECB schedule, and this is on New York time zone. So we're looking at, when we look at times, we've got 13 minutes to this announcement here. European Central Bank president going to talk. That'll certainly move the markets a bit. All right, so if we're looking at the NASDAQ, we can say there's some climbing that occurred. And if we go to maybe 30-minute candles, we could say there was a support level here. Okay, and why is this level important? So we see resistance and it dropped. Resistance and it dropped. Then it broke through here above that price level and it became support. And typically that's the way support and resistance levels work. As resistance is hit, holding the price from going higher, once it breaks through, whatever economic news allowed that price level to get broken, that news then causes that price level to be support. Okay, so resistance, some kind of good news came through and it broke the resistance. It becomes support. Then bad news came and it broke the support. You see the size of the candle. That's a breakthrough candle. That means momentum. That means there was big news of some kind. It broke the support and down it went. Now it climbed back up. It hit the resistance here and dipped. And today it broke back above that resistance. So now we are above that support level. Okay, since we're above the support level, what might you do technically speaking? Buy from above the support as a technical strategy. So if I go to 15-minute candles, I see the support level here. Maybe I say, okay, the volatility's down today. We saw that when we did the fundamental review. The volatility index is down like 4%. The futures are green. We just broke above this resistance level, which now we would think, technically speaking, should act as support. So let's do this strategy then as a simulation. Let's say I put a trade size that makes sense for me and I buy. Okay, fine. Where would I put my stop loss? If I'm using a stop loss, just below this support level might make sense as one option. So I say, okay, 11,250 for my stop loss. It has to break the support before I give up. So modify 11,250. Okay. There we go. So it has to break the support level. It would take really bad news. Maybe the European Central Bank says something that spooks the market, that breaks the support. Okay, I'm ready. I don't know what they're going to say. If they say good news for the economy, for Europe, then that could cause, it's such a global marketplace, that could cause the NASDAQ to shoot up. And we just as easily could be looking at the FTSE or the DAX, same thing. All right, so now I have a position. I have a limited risk. Where would I take profit here? Technically speaking, I see resistance here. Okay, resistance and drop, resistance and drop, resistance, drop, resistance, drop. Okay, so if this is going to go running up, a spot that I might think to take profit is maybe before that first resistance level up here, which is about double what I'm risking. I'm risking to my stop loss here, my potential profit up near this resistance, let's say 11,450 or 11,440. Let me modify, take profit, 11,440. Okay, there we are. Limited risk move, double potential profit to what I'm risking. And by the way, if I'm scalping, I could close now, right? Some scalpers would just be in and out in a minute. We're above the support. It went up. Boom, take your $50 profit. That's not what we're doing with this move. We could be, or you could be, but with this simulation, we're seeing if it'll run up to the first resistance up here before it breaks the support. Okay. What about a sell stop? Georgios is asking. Good idea. If it breaks this support, that means there was really bad news, right? So what kind of position could we prepare in case it breaks the support and hits our stop loss? The same reason we get out of the buy is the same reason you might say, wow, I think I'll sell now. So what kind of pending order sells from a lower point? If it comes down and breaks the support and you decide you want to sell, that would be a sell stop. So we can get in here and say if there's any unexpected fundamental news. Remember we said you can prepare for unexpected news? I don't know what it might be, but it could be something really bad that makes the NASDAQ reverse course and break that support. If it does, you can be ready with a sell stop because some fundamental news, you just don't know when it might break. Okay? So we prepare for the unknown. We're trading with the known right now, which is positive momentum on the market according to the volatility index being down 4%. Okay? So we're trading up with the current momentum, and you could already be scalping small profits. Then we're preparing for the unknown fundamental news that could break at any time, pending order, sell stop, sells from a lower point, and we could say if it hits 11,550, or let's say 240, 11,240 would be surely below that support level. So 11,240, and then my stop loss would be back above that broken support if it does break it, back up at 11,000, let's say 300. So limited risk, and my take profit could be at the next support level down here, 11,000, let's say 130. Just as an example. Okay, so there's our pending order. If we win on this one, great. The sell never opens. If this reverses, breaks the support, and hits the stop loss, we get in on a sell, and the take profits at the next support level in case there's some bad news that causes a crash. Catherine, I'm on the MetaTrader 4 platform also. And yes, you can put in sell stops, exactly like how I just did it. Okay? You open the order window, you change to pending order, you pick sell stop, that sells from a lower point, and that's what I just programmed. Okay? So I'm going with the current fundamental news of lower risk today, and the futures are up. So hey, why not buy? And then preparing in case the news swings, in case it changes with some unexpected headline, I'm ready with a sell stop already as well. Okay? So one way or another, I'm either going to profit on my buy, or I'll take a shot at a sell potentially and go after a profit on a sell. Again, I'm up 60. I could take my profit if I'm scalping. Okay? When you're scalping and you go in the direction of the current wave, the current fundamental news, it's easy to take short movements and take some small profits. You can get in and out, in and out. So that could be a nice profit if that's the size you're looking for. That's what you're looking to do. Okay. And that's the idea of riding the wave, by the way. We did the quick review. We saw it. Sentiment was up. Volatility was down. And boom, you jump on and you can take your quick $100 now. Profit. Okay. Again, I'm just letting it run a bit to see if it'll push up higher. All right. So what other asset would someone like to look at? Maybe a European indice, or let's look at the DAX. You see it's the same thing, isn't it? It's bouncing up after a pullback. It's in an uptrend on the day. It's up on the day and now bouncing after a pullback. Okay. Not as clear of a support resistance level. You see the resistance is here, and it is above that. Okay, here was the resistance. Here's the breakthrough. It came back below it here and then back above it. I don't like that movement as well, but the other indices are doing the same thing right now, or a similar type of movement. Okay, I have a request for Euro USD and gold. So let's look at gold first, as I know we have a lot of gold traders. I already drew a support level here for gold. You see here, and by the way, that's one of the profitable trades we had from Monday, I believe. Gold went up a bit from a low point. So we're looking at 4-hour candles. This is quite a support level. This is all the way back to the 12th of August. It hasn't dropped below this support level since the 12th of August. So here's the breakthrough candle, and then it became support, 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 and here it is above that level. So depending, if this is a long-term move, you could buy from this support level now, put your stop loss down here. But if you're scalping, that's quite a distance down. Okay, we're talking at $44 down to the support. So that's quite a risk if you're taking a large trade, large exposure type move. For small exposures, that distance to stop loss could be good. But what we're looking at in the micro movement is a downtrend. On the 5-minute candles, a little pullback, but an uptrend on the day. And as has been par for the course, as the markets have been going up today, so is gold, which is backwards to the usual safe haven concept. Usually when the stocks are rising, gold is dropping, right? Traditionally. But since the pandemic, gold has been going up with the stock market. So it doesn't surprise me that gold is up today as the major indices are up. And as the volatility fear factor is down, gold's actually going back up. And part of that is because the US dollar keeps weakening when there's positive news. And when there's fear, people buy into the USD lately. So with fear, with the volatility index rising, which it's not today, then the USD tends to strengthen. And the opposite, when the volatility index is dropping, so is the USD, because people are leaving the US dollar and getting into other currencies that they deem maybe more risky. Okay, so it's an interesting relationship that's been going on fundamentally. Technically, what does gold look like? It looks like an uptrend today. It looks like it broke this support level here today. Okay, you see, this is 15-minute candles. Support, support, breakthrough, resistance, and it got back above it as support here. Support, support, support. So it looks like a move on gold could be, if you buy on gold right now, then to have a small risk, you could put your stop loss just below the support level that was established today. Right here, I could say, okay, if it breaks below the 5-minute candle support, then I'm out. And if it makes a big run up, then great, I could take profit somewhere up here. Okay, so limited risk, large potential profit, maybe stop loss 1939. If you want to be more patient, you could put it below this here. I like to have my stop loss below 2 support levels, so maybe below this one, 1936. Depends how much you want to risk, right? So maybe I say, okay, gold, stop loss 1936. Take profit up here around 1964. Okay, so now I have limited risk with 2 support levels on the 15-minute candles. 1, 2, it would have to break both of them for me to lose, for me to give up. And if it rises near this resistance level up here that it reached not that long ago, that's a nice little profit, right? I have 2 to 3 times the potential profit to what I'm risking. So again, if I'm right on one of these 2 moves, I'm happy. I made a nice profit. Maybe I say, let me take my $90. Okay, I just pocketed $90 profit. Now the risk on this is covered quite a bit. And if I profit, great. Okay. Julian, good question. Good point. Julian, for everyone else, if you don't see what he's writing, and I'm curious, do you see what Julian typed, or do you all not see what each other typed? Julian's asking about stop losses. Can you all see his question? It's marked on private. Okay, I thought we had it set up that way. I probably can switch it, but maybe it's better I leave it private. But Julian's asking, how do you know where to put the stop loss and not get stopped out too early? You give up on it before it actually gets going the direction that maybe in the end you were right, but you gave up on it too early, having your stop loss too close. And what I like to do many times, unless I'm scalping real short movements, on a movement like this, I like to be patient. So I'll take a trade size that I can put my stop loss not below 1 support level in this example, but below 2. And so I already alluded to that if this drops and breaks this support level here, where it went down, support, and bounced up, if it breaks the first support level and I had my stop loss here, I might hit it really quick, and then it might go up. So to avoid getting stopped out too early, I put my stop loss below 1, 2 support levels, and my stop loss is down here. Okay, so that's the answer to that question. Have a more patient stop loss. Widen the strike zone so that you don't give up too early. And if you say, but if I put my stop loss that far away, below not just 1, but 2 price levels, then I'm risking more. And I say, well, then take a smaller trade. Okay, go after smaller profits with smaller trades, but now you can be more patient with your stop loss and you don't have to try to be so perfect. So maybe a smaller percent gain, you actually gain more profit because you'll maybe be right more often. Okay, you don't have to try to be so perfect. That tends to work many times. Joe, if the movement goes through your stop loss, yes, the system will close the trade as quickly as possible at your stop loss mark. Okay, because today's Friday, I'll caution you. If you carry trades through the weekend, I tend to close most of my trades off before the weekend unless they're really long-term moves where my stop loss is really far away. Then I'm okay carrying through the weekend. If my stop loss is $30, $40 away on gold, okay, I might carry through the weekend. If my stop loss is $5 away on gold, why do I keep mentioning the weekend? Because the market stops, and then when the market reopens on Sunday night, you can get really big gaps. And if my stop loss was only $5 away on gold and the market gaps $20, guess what? I'll lose $20 down, not just to my stop loss. Can gap right past your stop loss. So on scalping short-term type moves, it's probably best many times, unless you want a risk of a gap going past your stop loss, to close things off before the market closes on Friday. Okay, and re-enter after the weekend, because you don't know what kind of fundamental news might happen over the weekend that could completely change the fundamental situation. That's the things you deal with the other type of fundamental news, the unexpected type. Okay, so let's move on. Our gold move is trying to climb. It's respecting our first support level. Let's give it time. We already collected some money on the NASDAQ, right? Going in the direction of the momentum. Okay, so let's look then at Euro USD because someone asked for that, and I think we'll have to stop today at that point because we've been going for about 35 minutes already. Okay, so Euro is climbing against USD. I didn't even look at this yet today till now, but didn't I just say the USD tends to weaken when there's positive sentiment? And we already said there's positive sentiment. We bought on the NASDAQ and profited in the simulation that I just showed you. The volatility index was down 4% plus when we looked at it. So we said, hey, positive sentiment right now. The headlines were a little mixed. So it wasn't like huge positive sentiment. But if I had to pick, we were saying positive sentiment, right? So it makes sense the euro is climbing against the USD then, because with positive sentiment, the USD has been weakening through this pandemic. Why? Because with fear, people trust the US dollar more than other currencies. And so the USD strengthens when the volatility index is up. Typically, that's what we've been seeing. And when the volatility index is down, we've been seeing the USD weakening, which is why gold can climb, because it's paired against the USD. Annika, yeah, we could talk about rollovers. I'll explain that in a moment. So it looks like euro is a buy right now against USD, okay? And if, by the way, a simple technical strategy right there, okay? Resistance, just 45 minutes ago or an hour and a half ago, it was below that resistance. You could add a buy stop waiting just above that resistance. Why would you prepare a buy stop above this resistance? Because we saw the sentiment was positive. The futures were green all morning. So a buy stop would already have caught this breakthrough candle. You'd be in the money. What can you do now? You can wait for a pullback, right? What kind of pending order could you put on Euro USD in case it pulls back to this support level? The broken resistance should act as support now, unless the fundamental news changes. Okay? If this pulls back, you could have a buy limit ready to buy. Okay? Let's go 5-minute candles. We see it here. If it pulls back to this support level, that could be a spot that's opportunistic to buy from. Why did the euro go rushing up? Well, the ECB talked today. It's been past 20 minutes. We saw they were going to talk in like 15 minutes. And so they're already talking. The markets must like it because the NASDAQ went up more. The euro went up more against the USD. The USD is weakening. That's signs of more positive momentum. Okay. So buying on the euro looks nice right now. You just have to pick your entry point. If you want to be patient, see if it pulls back down. The fundamentals say buy on the euro right now against the USD. Okay. I don't exactly like this entry point because it's at a resistance level. If you put a pending order above here, if it breaks this resistance, you could buy from up here as a buy stop, then put your stop loss down here. Okay, waiting for a breakthrough. That could be something you plan. Okay. Maybe we look at crude oil and call it a day. I'll let you all go and start place some trades on your accounts, hopefully. Make some profits. Let me find it. There it is. So you see we're kind of avoiding on Euro USD selling. Why? Because the fundamentals say buy. And you see it keeps climbing. So just because it was at the resistance doesn't mean you necessarily should sell. The European Central Bank's talking, Patrick. I'm not listening to it, but I know that event's occurring and the euro's pushing up. So whatever they're saying, the markets are liking for the euro. Okay. All right. So crude oil. What do we see? We see we looked at the fundamentals as to why oil came down. Okay. It dropped because of oversupply fears. Now we look and we say, look at this support level. Okay, right here. And I have a pending order waiting, and if it came down just a little further. Look at the resistance, support, and look, it's close to that support level. So if it gets a little lower, you could have a buy limit like I have, okay, buy limit, waiting to buy if it pushes down to the support level. That might be a smart move. The oversupply fears are still there. Oil could push down a little further. It looks like around 36-ish or 35. As you get close to this old resistance, which is support, that could be a spot that you could be interested in buying on oil. Now, let's say you're a longer term trader and you say, I don't care whether it gets all the way to the support level. Maybe you say, okay, I'll buy now. Why buy when the fundamentals say there's an oversupply? Because the price corrected already. It dropped for 2 weeks. That's why it dropped. Unless the news gets worse, then maybe oil recovers, right? So you could put your stop loss now just below this support level. So down around 34. Modify, stop loss 34, and take profit could be back up from where it plunged from, 42.5, if it goes back up to that resistance level. What do you think will happen if good news comes out about therapeutics or a vaccine for COVID? What do you think would happen to the price of oil if news breaks over the weekend or even today that, hey, it looks like there will be a vaccine sometime in the next month? What do you think would happen to the price of oil? Yeah, likely it would shoot up, right? It might go up if there was good news about the virus, right? Positive economic news could drive oil back up, and it's on a support level almost. So if I buy on oil, put my stop loss just below the support, and my take profit up here near the first major resistance, I have better than 1-to-1 ratio here, potential profit to risk. Okay, and I'm being pretty patient here. Oil could drop another $2. I'm still in. I'm below that major support level. So this is more of a longer term type move, more of a longer term type outlook on oil. I'm not going with today's news. I already see oil drop for 2 weeks because of today's news. That news has been there. Now I'm looking forward and saying, well, there's going to be probably positive news eventually about vaccines. Maybe I take a shot at a buy here with a patient stop loss down a few dollars per barrel with a potential profit of a few dollars per barrel up. Okay, so now I took maybe a mid-term type move, mid to longer term move on oil. Okay, with the idea of knowing what the movement was already because of fundamental news and anticipating what maybe the fundamental news could be. Now, obviously, we could be wrong, which is why the stop loss is there, right? So just an idea on oil. You obviously could have a sell stop down here. If it breaks the support, sell stop, ready to go. I don't anticipate oil dropping down into the low 30s again anytime soon, but it could happen. You never know. So that's why the sell stop is there. Because why guess the market? Just because I'm saying, oh, I don't think it'll drop in the low 30s or into the 20s again per barrel doesn't mean it won't. So a sell stop down there below this major support level, you could prepare it. Put a trip line in the market to sell in case that happens. Okay? Again, it's not about being right. Many times it's about being smart. Okay? All right, everybody. Thank you very much. Good luck with your trading to the end of the day. Be careful about your moves. If you have close stop losses, be careful about carrying them through the weekend. For your more patient moves, certainly you could carry trades through the weekend. Real quick, there was a question about rollovers. Understand that anything that's traded on futures, if there's a rollover, okay, then if you gain from the rollover, you'll see a negative adjustment on your account. And if you lose because of the rollover to the new contract price, then you'll see a positive adjustment on your account. So no matter what happens with the rollover, there's an adjustment to make things even. Negative or positive adjustment, so that the new contract price that you're rolled into, whether it hurt you or helped you on your open positions, there's an adjustment on the account to make up for it. That's the way rollovers work. You also on oil can choose to trade on the specific contract date. We have those available, same with gold, so that there is no rollover. The trades will just be closed when that contract ends. Okay? Joe, the rollover itself doesn't cause you to lose money, no. If you see a negative adjustment, it's because you gained on your open positions because of the rollover that same amount. And if you lose, if you get into a worse position on your open positions because of the rollover, then you'll see a positive adjustment on your account. The trades keep running. Okay. All right, everybody. Thank you for joining. Good luck with your moves, and we'll be back at it next Monday. Okay. All right. Bye for now.